Listen up because the Fed's about to make a move. The financial world is buzzing with anticipation, and every trader, investor, and analyst is glued to their screens. They control the money, and their interest rate decisions send shockwaves through the market. The Federal Reserve's choices can influence everything from mortgage rates to the cost of borrowing for businesses. Right now, everyone's on edge, waiting to see what they'll do next. The stakes are incredibly high, and the tension is palpable. Will they raise rates again and risk a recession? This decision could slow down economic growth, leading to job losses and financial strain for many. Or will they ease up and let inflation run wild? If they choose this path, the cost of living could skyrocket, making everyday essentials more expensive for everyone. It's a high-stakes game, folks, and the stakes couldn't be higher. The Fed's decision will impact not just Wall Street, but Main Street too. We're talking about your money, your investments, your future. Every decision they make trickles down to affect your savings, your retirement plans, and even your daily expenses. So buckle up, because things are about to get interesting. The financial markets are like a roller coaster right now, with ups and downs that can make your head spin. The Fed's walking a tightrope, and the whole world's watching. One wrong move could tip the balance, leading to either economic stability or chaos. Stay tuned, because this is one financial drama you won't want to miss. Word on the street is the Fed's leaning towards a quarter-point rate cut. That's right, a tiny trim. They're dipping their toes back into the pool of lower rates, but they're doing it cautiously. Why? Because the economy's sending mixed signals. On one hand, we've got inflation still rearing its ugly head. Prices are going up, and the Fed hates that. On the other hand, the economy's slowing down, and nobody wants a recession. It's a tough call, but this small cut shows the Fed's trying to find that sweet spot. Let's be real, inflation is public enemy number one for the Fed. It's the invisible force that affects everything from the cost of groceries to the price of gas. And it's not just a local issue, it's a global concern that has everyone on edge. They've been battling it for months, and it's been a brutal fight. The Fed has tried various strategies, from adjusting interest rates to implementing monetary policies, but the results have been mixed. The volatility in the stock market reflects the uncertainty and the high stakes involved. Every time they think they've got it cornered, it pops up somewhere else. It's like a game of whack-a-mole, where just as one issue is addressed, another one emerges. Rising prices in essential goods like food and fuel hit consumers the hardest, making everyday life more expensive. This latest rate cut, it tells us the Fed's still worried. They're pulling out all the stops to try and stabilize the economy. Jerome Powell and his team are under immense pressure to find a solution that works. They're not convinced inflation is truly under control. Despite their efforts, the data shows that inflation is still a significant issue. The fluctuating stock market and the inconsistent economic indicators make it clear that the battle is far from over. They're looking for more evidence, more proof that prices are coming down for good. The Fed is scrutinizing every piece of data, every economic report, to find signs of lasting improvement. They need concrete evidence before they can declare victory. Until then, expect them to keep a close eye on everything. The Fed will continue to monitor the situation closely, making adjustments as needed. Their vigilance is crucial in these uncertain times. Inflation is the monster under the bed, and they won't rest easy until it's gone. It's a persistent threat that requires constant attention and action. The Fed's mission is to ensure economic stability, and they won't stop until that monster is finally defeated. Section 4, buckle up, market volatility ahead. Here's the thing about the market, it hates uncertainty. And right now we're swimming in it. The Fed's rate decision is going to make waves, no doubt about it. Get ready for some short-term volatility, folks. Stocks could go up, they could go down, they could spin in circles. Why? Because nobody knows for sure what the Fed will say or do. The market thrives on predictability, and right now that's in short supply. So hold on to your hats, because it's going to be a bumpy ride. Section 5, buy the dip opportunity knocks. Now, before you panic and sell everything, listen up. The market's ups and downs are a natural part of the financial ecosystem. It's easy to get caught up in the fear and uncertainty, but remember, every dip is an opportunity in disguise. This short-term volatility, it's a gift. Think of it as a sale on your favorite stocks. Just like you wouldn't pass up a great deal at your favorite store, you shouldn't pass up the chance to buy quality stocks at a discount. That's right, a chance to buy low and ride the market back up. Historically, markets have always recovered and grown over the long term. By buying during a dip, you're positioning yourself to benefit from the eventual upswing. See, long-term, the economy is still strong. Despite the short-term noise, the fundamentals of our economy remain robust. Companies continue to innovate, new technologies emerge, and consumer demand drives growth. We've got jobs, we've got growth, we've got a bright future ahead. The workforce is resilient, and businesses are adapting to new challenges and opportunities. This resilience is what fuels long-term economic growth. So when the market dips, don't run for the hills. Instead, take a deep breath and assess the situation. Look at the bigger picture and recognize the potential for future gains. See it for what it is, a buying opportunity. This is your chance to invest in companies with strong fundamentals at a lower price. It's like getting a head start on future profits. Pick up those stocks you've had your eye on, the ones with solid fundamentals. Do your research, understand the companies you're investing in, and make informed decisions. The ones with solid fundamentals. These are the companies that have a proven track record of performance and the potential to grow even more in the future. This dip won't last forever, and when the market recovers, you'll be glad you bought when everyone else was selling. Patience and a long-term perspective are key to successful investing. And when the market recovers, you'll be glad you bought when everyone else was selling. Remember, the greatest investors see opportunities where others see obstacles. So seize the moment, invest wisely, and watch your portfolio grow. Section 6. The balancing act, inflation versus growth. The Fed's got a tough job, folks. They're like the economic tightrope walkers trying to keep everything in balance. On one side, you've got inflation, which they're desperately trying to control. On the other side, you've got economic growth, which they don't want to stifle. It's a delicate dance, and one wrong step could send everything crashing down. This latest rate cut shows they're trying to thread the needle to find that sweet spot where inflation is tamed and the economy keeps humming along. Section 7. Stay ahead of the curve. Subscribe now. Want to stay ahead of the game and be the first to know? Want to know what the Fed's every move means for your money and investments? Then subscribe to our channel right now. We'll break down the latest economic news, give you expert analysis, and help you navigate these choppy market waters with confidence. Don't get caught off guard by sudden changes. Subscribe now and join the thousands of investors who rely on us for their financial insights. We'll help you make sense of it all so you can make smart decisions and come out ahead in the market.